Hey y'all, what's going on? My name's Hayden Crabtree, and I'm going to teach you today all about basis, what the basis is, why it's important for you as a real estate or potential real estate investor to know and understand all about basis, okay? So basis is this thing that you really don't see in any other part of the world other than financials, so we don't really have any background to what the basis is. But essentially what the basis is and what the basis equals whenever you're purchasing investment property, not property you're going to live in, that doesn't really matter. Investment property is going to be the purchase price of the property, so purchase plus the improvements. Okay, so here's an example, right? If I buy a house, let's say I buy a house for $100,000, and let's say I put into that house through, let's say a new kitchen, okay, and let's say a new bathroom. Let's say I put $20K into it. So now my basis in this property is $100K purchase price plus $20K of improvements. My basis equals $120K. Okay, so $120,000 would be my total basis in this property. Now, basis is important for two different reasons, okay? Number one is going to affect our taxes on the income side and on our capital gains if we're to ever sell the property, okay? So, here's what I want to get across to you. There are two different types of basis, okay? So I want to try and hit everything here in a way that's going to make sense to you so you can take away from this video and know way more than the average person. And so if you do currently own rental property or if you don't currently own rental property, doesn't really matter, but you'll have a great idea moving forward on how this can help you out, okay? So here's the important thing to know, is that in this house that we bought for $100,000, okay, this house, there's two components. There's one, the house, and then two, there's the land that's underneath the house that we buy, right? So this is the second component. One is the actual building itself, and this is called an improvement. Okay, this is called the improvement, and number two is the land. So out of this $100,000 that I bought all of this for, I bought all of this for $100,000. I could actually say that out of this thing that I bought, this package, right, of the improvements and the land, this could be worth $90,000, and this could be worth $10,000 to make up the $100,000 purchase price. Now, here's why this is important. In real estate and in business and in accounting and taxes, we have this thing called depreciation. Okay, I have other videos on how depreciation works, but essentially, depreciation is an expense that we get to take to shield our income from taxes, but it's not actually an expense we incur. Okay, so I'm going to say that again. This is called a ghost expense. We get to write this off to not pay taxes on this, but we don't actually have to pay anything for this expense. So why this is important is because you cannot depreciate land. You can depreciate improvements, but you cannot depreciate land. So out of this full $100,000 that you buy, we've got $90,000 in improvements. We put an extra $20,000 into it. We have $120,000 total basis, but we have $10,000 that we cannot depreciate, right? So we have $120,000 minus 10 because of the land that we cannot depreciate. So we have $110,000 of depreciable real estate, depreciable basis here. So why this all comes back around to basis? Because it's important to know out of your basis what you can depreciate and what you cannot depreciate. Now here's a pro tip. If you are buying a piece of property, a lot of people just say, hey, I'll give you $100K for this house. But you could type in one or two extra sentences that says, out of this $100,000, I'm buying your building for $95,000 or however much you can, and I'm buying your land for this. Now, the goal, of course, isn't to be illegal in any way, shape, or form, but we do want to allocate as much of our purchase price to the building as possible because we're going to be able to depreciate that. Now, here's what this looks like. So we have $110,000 depreciation. Normally, we can take this amount for residential properties over 27 and a half years. Okay? So 27 and a half years is how much that we can take this out. So what that means is I'd take the $110,000, I'd divide it by 27 and a half, and that would give me how much depreciation I get to take every single year and shield my taxes with it. Now, the cool thing about this is that this is an expense that we get to have every single year. So let's just say, I don't know what this is. I don't have my calculator on me. So let's say this amount is $5,000. I know it's not. So we're going to buy this full package. The $100,000 plus the $20,000 improvement is $120,000. So this is our basis, right? The $120 is our basis. The $110,000 is our depreciable basis. But after 1 year of depreciation, right? So if I profited from this $5,000, then I would get to take depreciation of $5,000 expense, and I would have taxable income at zero. So I would pay no taxes on this. Now, how that would work out in terms of the basis is I have a $120,000 basis to start with, and I'm going to take in year one $5,000 of depreciation, which means my year two basis, in year two, my basis is only going to be $115,000, and my taxable basis, or excuse me, my depreciable basis, not taxable basis, my depreciable basis has gone from $110,000 down to $105,000, meaning I only have $105,000 of depreciable basis I can use, because again, that land is still worth $10,000. Okay, so now that I have this information, I understand how basis works. Here's what's important to know on the sales side. If I'm going to sell this property, and let's say I'm going to sell it for $150,000, okay? I'm trying to find some space here. So if I'm going to sell it for $150,000 in year two, well, I know I bought it for $100,000 plus the $20,000 of improvement, so $120,000. Most people look at this and say, I made a $30,000 profit, right? Because I'm all in at $120,000. And again, depreciation doesn't matter. If the bank gives you 80% of this and you're only putting down, call it $25,000 of your own, $24,000 of your own, it does not matter in terms of your basis. So even if the bank is giving you money, you can still use that for depreciation, okay? So that's a very powerful thing to note. So we're going to look at this and say, well, I'm making $30,000. Well, not in the eyes of the government, not in the eyes of the IRS. The IRS does not recognize that you are in at $120,000. Instead, they recognize that you're in at $115,000, okay? Because whenever you sell it, they're going to look at what your current basis is. So the gain you're going to make on this in the eyes of the IRS is not $30,000, it's $35,000. Okay, so you're going to get taxed on a $35,000 gain instead of the $30,000 gain. So it's this double-edged sword, right? Depreciation can shield you from having to pay taxes, but you're also on the backside going to have to pay a little bit more in taxes. But this is going to be taxed at capital gains, and this is going to be taxed depending on the structure you own it in, normally through ordinary income. So this can be higher tax rate for most people than this is going to be. So it's powerful to skip on taxes here and to pay the capital gains lower rate over here. It's tax arbitrage, if that makes sense, okay? So this is the basis, this is depreciation, this is everything I wanted you to know about how that works. If you have any more questions, do me a favor, drop comments below. Let me know what you think about this information. Smash the like button, super appreciate it. Helps the algorithm, helps get this out to other people. Subscribe to the channel, I would really, really appreciate it. Trying to grow the channel, putting out content here every single week on how to be a better real estate investor, how real estate investing works, and how you can make it big as a real estate investor. So with that being said, check out some of my other videos. I have a ton of great content on here about what's happening in the world, fundamentals of real estate investing, and I have a book, Skip the Flip, Secrets the 1% Know About Real Estate Investing. #1 bestseller. I'd love for you guys to check it out. It's free, either audio copy or PDF. You can get it absolutely